Good evening, everyone, and welcome to the NGEN Markets Training session. Meanwhile others are joining in, we will start with our session for today. So I hope I am audible to everyone and my screen is visible. And here what you can see is that we are going to be discussing about a couple of topics. One of the topics being mutual fund comparison and generating reports. So we will be discussing about how we can select mutual funds within a specific category. You can easily add in categories in our compare section and then do the certain furthermore analysis with various tools like rolling analysis, drawdowns analysis, and other tools like point to point and even the monthly SIP analysis. Furthermore, we will be generating a customized comparison report to show you how you can actually generate a co-branded report, and you can use this report for the client conversions as well. So that's how this works out for today's session. And after the session, we will be opening the forum for Q&A. So if you have any questions regarding the session or any other parameters in NGEN Markets, you can easily write it on the chat box or verbally, and we will try to address them. So that's how this works out for the today's session. So let's go ahead with our NGEN Markets terminal. So here, as you can see, this is our NGEN Markets terminal. I'm sharing my screen right now. If it is not visible, please let me know so that we can then start our session. So as you can now see that this is the market section we have, and to compare any particular set of funds or even any securities, what you can effectively do is you can head towards the compare section. Now, within this compare section, this is a very comprehensive section. You can call it as a heart of the system, where you can compare multiple sets of securities in this particular set of a section. Now, here we have given a couple of options. So we will be exploring these options one by one. One of the option being is that you can easily add singular security in our compare section. To do that, you can effectively add in a security, let's say Axis Midcap, and it easily gets added into the system, as you can now see. Similarly, what you can do is you can also add in a stock. So we can explore the stock section later on, but you can easily add in as many stocks as you want. You can easily type in the name of the stocks, and then you can see that the stock is also being highlighted into the system. And here what we have given here is add other items and add groups. So for an example, if you want to add the group of the entire mid caps, so how would you do that? You can easily add in a SEBI category or all the AMC funds in the compare section. Now here, what we are going to be doing here is we are going to be comparing multiple funds in one single category. So we can just add in a mid cap funds. So all those categories will be added into the system. And you can now see in the main list that these are all the 29 mid cap funds which you can now compare in the compare section. Now, the compare section is a very comprehensive section. One of the important comprehensive section part here is that you can easily sort in the data sets here, which you have added. Similarly, we have also given the add other items here. So let's say we would like to compare our categories, all the mutual funds, mid caps funds with the index. So let's say we are adding an index like mid cap 150. So you can now see that Nifty Midcap 150 is being added into the system. So here you can see the index Nifty Midcap 150 is here. Similarly, you can also add in historical category average. So let's say we want to compare the mid-cap category average on a historical basis, you can easily do that as well. You can now see that the category average for mid-cap funds are being added and being compared in our system. Now here, the most important thing is that the main list comprises of three factors. One of them is a return column, other of them is a relative column, and the third one is the holdings column. Now, the three factors, what you can do is you can effectively take the data sets of the return column, and these are all segregated in these manner that you can change all the data sets from the start date. So for an example, what I'm going to do is I'm going to remove a couple of funds from here. So let's say I would not like to have funds which are at least having 5 years of age. So you can easily sort in any data points. Let's say a CAGR or even a standard deviation, you can do that. So let's say we are sorting in based on the age in ascending or a descending order. And what you can do is you can delete those funds from the compare section. So easily you can now see that these funds, which are at least 5 years of age, are being added in the compare section. And what you can do is you can effectively see that these are the couple of mid-cap funds which we have. And now you can now compare the funds and come up with a proper selection for the mid-cap funds in the compare section, right? And now what you can do is you can effectively sort in the data points like the 3 months, 6 months, and even the 5 years here itself. Now here, what we have given here is that you can also compare the data points based on one particular start date. So let's say you would like to know that what is the start date of one particular, all the data points, if you want to compare and see the CAGR and the standard deviation and the Sharps ratio comparison as well. So let's say what you can do is you can click on this and you can now see that there's a start date given here. So what I can do is effectively choose a start date, let's say 5 years ago. And once you click on go, you can now see the CAGR and the standard deviation and even the Sharps ratio being changed based on the custom start date. And you can effectively then compare all the mutual funds based on the Sharps ratio as well. So you can now see that from one particular start date and the current date is the end date. So what you can here see is the best Sharps ratio fund is being Quant, Axis, PGIM, Motilal, and Nippon. Similarly, for the Sharps ratio for the ones which are having the worst ones are the IDBI and HSBC mid-cap funds. So effectively, what you can do is you can effectively choose a custom start date, and we can now display here the custom start date here itself. Now here, what you can effectively do is you can also go ahead with the relative column. As you can now see that we have added Nifty mid-cap 150 in the main list itself. What you can effectively do is you can relatively map in based on particular set of parameter. Let's say for an example, we would like to choose funds which have generated better alpha against Nifty Midcap 150. So how would we do that? You can effectively search an index here. So let's say we are choosing Nifty Midcap 150 and it gets added into the system. You can now calculate it. And once you have done it, you can now see that based on this particular set of a start date, which is the last 5 years, you can see these are the funds which have effectively generated the positive alpha. So here you can see that annual excess return over benchmark is annualized return over Nifty Midcap 150. The cumulative excess shows you the cumulative excess return over the benchmark, which is our Nifty Midcap 150. And you can now see that a couple of funds are in negatives, which have provided a negative alpha between the last 5 years. You can change the start dates from here. And you can also see the beta as well. So this is a relative column. The pink column highlights the relative column data sets upon whatever benchmark you have added and compared into the compare section. And what you can effectively do is you can check out the beta as well. So beta against the benchmark, as you can see, the benchmark of Nifty Midcap 150 versus Nifty Midcap 150 would be 1. So even the correlations would be 1. So that's how you can effectively see that the entire set of the beta against two benchmarks, which are identical benchmark, is going to be 1. But you can now see that these are the funds which are highly correlated. So for an example, if you are taking a look towards the correlations, right? So correlation is basically that if you're closer towards 1, you're highly correlated towards that benchmark. And if you are farther away from 1, then you are lowly correlated. So for an example, you can now see that the category average of the mid-cap fund is one of the highly correlated as a security. And then the third most highly correlated asset you can see is Nippon India Growth Fund. And you can now see these are the funds which are highly correlated. And the ones which are not is actually Quant, Motilal, PGIM, and Axis. So that's how you can take a look towards it, because you can now sort in any data points based on ascending and the descending order. And here we have also given the tracking error and the information ratio. The tracking error and the information ratio are the parameters to show that are we different than the benchmark or not. So for an example, if you have a very high tracking error, it means that we are fairly different than the benchmark based on the standard deviation of the each data points. And here what you can see is the information ratio. It's a ratio between the alpha and the tracking error. So here, the higher the information ratio shows you the better the assets are against the benchmark based upon the difference and also based upon the alpha they have created. So you can now see the better alpha they create and the better tracking error they have. You can now see that the information ratio is fairly higher. So that's how this works out. And you can also see that some of them are actually having a negative tracking error because of a negative information ratio, because of the fact that we have an annualized excess return over the benchmark, which is an alpha in negative. So that's how it works out in the relative column as well, in choosing the mutual funds and in taking into consideration a benchmark when you are taking all those one single category in the system. Then in the third part, what you can do is you can also review the holdings column. To review any particular set of a holdings column, what you need to do is you can head over to the holdings column, which is given in blue. Now here in the holdings column, you can explore the large cap percentage of those funds, the mid cap percentage, and even the small cap percentage. So for an example, Taurus Discovery Mid Cap Fund is having a high percentage of small cap securities in that particular set of a mutual fund. And similarly, you can also check out the large cap percentage. For an example, a quant mid cap is actually having a very high percentage of large cap securities into the system. So that's how it works out when you're comparing the funds. Either you would like to be, highly concentrated towards the mid cap as you're choosing a mid cap fund. So this is how you can find the purely allocated mid cap funds based on the securities they have chosen in the particular set of the fund. And similarly, we have also given the P and PB for a particular set of the mutual funds. So take a look towards this as well. And we also have the YTM, net YTM, and even the average maturity duration. So these all parameters are basically for the debt mutual funds or even the hybrid mutual funds. So if you have added any debt or hybrid mutual funds into the compare section's main list, you can easily take a look towards these. Check out the column views. Now you can customize the column views in our NGEN Markets terminal. So how would you customize it? You can easily do that from this particular set of a tab, which is called as show hide columns. Here, what you can do is you can click on this all columns, and you can now see that some of the columns are now vanished, and you can now see none of the columns are there. So what you can effectively do is you can choose any particular set of a column here. So let's say Sharpe's ratio, you can choose the information ratio, and even the large cap, mid cap, small cap percentages. So that's how it works out. And you can now compare all the mutual funds against each other and even the indices against these particular set of the parameters given here. So that's how the customization of the column views works out. And if you want to unload all the columns again, all you need to do is click on all columns, and all the columns will be unloaded based on the return column, relative column, which is given in pink, and the holdings column, which is given in blue. So these are the three columns which we have given, and you can customize the relative and the return column based on the custom start date, which we have given here. So you can change the dates from here, and you can also change the start date, custom start date for the returns column from here itself. So that's how this works out for the main list here. Now let's head towards other column sets, other parameters and other tabs here. So for an example, we also have rolling analysis. But before going towards rolling analysis, one important update here is that what you can do is you can also download these data sets in Excel CSV. So if you want all these data sets in an Excel, whatever parameters you have chosen here in the compare list, you can easily click on this export results in CSV, and you will get those data sets in Excel, right? So here, let's go ahead with the rollings analysis. Now, rollings analysis is a very important tool to do the comparisons based on the return parameter or based on the volatility parameters as well. So let's take a look towards the rollings analysis tool, and let's review how it works out and how you can effectively use this in selection of mutual funds. So for an example, when you're choosing a rolling window here, you can now see that this is 260. So 260 is basically one working period in a year. So it's a working period we have chosen. So specifically a month is 21 days in a month. So that's how we have chosen 260. And what you can effectively do is now, as a rolling window is 1 year, you can choose for a 2 year as 520 and for a 3 year as 780 as well. So here what you can do is you can also change the start and the end date, and you can also change the methodology. Now we will talk about the methodology and the statistic. Now we have given 4 kind of statistics here. One of them being point-to-point returns, simple returns, and on the return side, and on the risk side, we have given volatility and the return upon volatility. Now, this depends upon what kind of a statistic you would like to choose. So for an example, we are choosing a simple return statistics. Now, the difference between the simple return statistic and the point-to-point return is that in the point-to-point return, there is a compounding effect, whereas in the simple returns, there is no compounding effect. So when you compare the securities in the simple returns, that you do not find any compounding effect. And you can now see the average volatility, highs and lows, all these parameters, which do not have the compounding effect, and it helps in an active comparison. So for an example, if we are taking a look towards the average, what does this average signifies? This average signifies the average return from one particular start date, which is 2018, till the end date, which is 2023, for a 1 year rolling window, right? So what you can do here is that, let's say we choose a data point here. So HDFC mid-cap opportunities on 2nd August 2022 is 10.48%. That is a 10.48% return sets, which is a simple return, which shows the sum of the previous 260 days daily return. And now what we do is we roll all the data sets from the start date of 2018 till the end date of 18th May 2023. And then we average these all data sets, and you can now see all these average. So the best average funds is definitely going to be, these funds which have backtested highest average returns in the last 5 years for a 1 year period. So this is a 1 year average return which we have given. Now, if you want to do an active comparison, you can effectively take a look towards the average on an ascending and a descending order. You can see here that HSBC, IDBI, and Sundaram, these three funds are having a very low average. And similarly, on the basis of average, what you can do is you can change the rolling window. So let's say, for an example, we are taking a look towards a rolling window of 780. So once you choose 780 and once you run it, you can now see the average being changed. And you can also see all the data points like volatility, high, low, range, and positive percentage are also changed. And similarly, you can see the absolute and annualized methodology. So for an example, if you see that it is now preset to annualized, but you can now choose an absolute, and you can now see the data points based on the average absolute return for a 3-year period in the last 5 years. Now, as we have only 5 years at the start and end date, we have a small data points. It's fairly small for just 2 years. And you can now see that any data point you choose, so for example, this one is an absolute return, which is a sum of the previous 780 days daily returns. It's basically as if you're investing every single day for 780 in the working periods, right? And what you can effectively do is now you can now compare these data points effectively into the particular set of the mutual fund analysis. So let's say we are choosing it again on 260 basis. And now we will explore these data points like average, volatility, high, low, range, and positive percentage. So for an example, if you see the average, the best funds which you have seen here are these top 10 funds. Similarly, on a volatility perspective, this is a rolling volatility parameter, which shows that how volatile are these rolling returns. So for an example, if you're looking towards a conservative mid-cap funds, then these are the funds which are actually lowly volatile, because on the basis of the simulation which we have given on the basis of rolling analysis, these are the funds which are having the low volatility based on the rolling returns. And similarly, you can also see the high and low. Now, high and low are that particular set of a point where they have backtested the highest return in the last 5 years. So let's say if you would like to find a fund which has backtested the highest returns, then these are the top 3 funds, which is 88%, 79%, and 79.03%. Similarly, for the lowest returns, you can now see that the funds which have backtested the lowest returns are these ones. So you can easily sort in and see that it's ICICI Pru Mid Cap Fund. Now, this is fairly risky, because if I would invest in one of the fund, I would have chances of getting into -41, because that's how the lowest the fund has actually backtested in the last 5 years. And you can also see that Nifty Midcap 150, which we have actually effectively added before in our compare section in the main list. You can see that in our rolling analysis as well. So that's how this works out. You can easily choose in based on any particular set of a parameter. If you're looking towards another set of parameter, which is called as range. So the range is effectively connected with the high and low. What it does is that it shows you the absolute difference between the highest backtested return and the lowest backtested return. And you can now see the higher the range is, the more volatile the funds are. And you can effectively see the volatility of the funds as well in the volatility analysis. And similarly, we have the positive percentage. It shows the periods of all the rolling returns in positive. So the higher the positive percentage of any particular set of the fund, the better are the funds, because they are more consistent in creating positive return sets. You can now see that these are the top funds like Nippon, Invesco, Tata, and Axis, which are more towards positive sides. You can effectively simulate the positive percentage based on the rolling return distribution as well. All you need to do is that if you want to know the intervals, which is definitely a 0% to a positive return set, which can be 100, 200, or even a 300 return set, which is a maxima, you can now see that these are the positive return sets being generated in our rolling return distribution. So effectively, Nippon India Growth Fund is actually having the highest positive percentage in the entire set of a list which we have. Now, what about the index and the category averages which we have chosen before? So for an example, on a category averages, you can see that in a historical sense, some of the funds have actually backtested better on the basis of positive percentage. So your probability of backtesting in negative is actually lesser when you're choosing funds with better positive percentage. And that's how you can effectively choose consistent funds based on the rolling returns analysis. And here you can effectively see that these are the funds which are having a very low positive percentage. So for an example, if I'm choosing IDBI mid-cap fund, you can now see that based on the positive percentage, which is 59.04, there is effectively 41% of chance I go into negative. And that's too much of a risk when you're choosing those funds. And that's how you can choose. Even DSP mid-cap is given here, which is having an average of 12%, whereas the positive percentage is just 63.05%. So that's how this works out based on the rolling returns analysis. And it's a very comprehensive tool. Rolling returns can also have another session anyway. But in the overview, what you can do is you can choose funds based on these parameters. And you can also choose the statistic as well. So for an example, we have given a rolling volatility stats. So once you review the rolling volatility stats, you can now see that these are the funds which are having the best average volatility or the worst average volatility. And these all the parameters which are now being compared based on the volatility itself. Now you can now see that in the COVID parameter, in the COVID scenario, all the funds in the equities had actually jump in the volatility itself. And you can now see there was another jump here in the April 2022. So that's how you can actually review the volatility based on the rolling analysis. And you can also see that which of the ones are actually having a very high average volatility, which you would like to not go ahead with if you're choosing funds which are more conservative in mid caps. So that's how this works out for the rolling returns analysis. And here in the rolling return distribution as well, it shows you the distribution between the two return intervals. So for an example, if I'm choosing the returns intervals here in the simple return stats, what I can effectively do is I can effectively model in such a way that I would like to know if my clients would be inclined towards return more than 10% and 20%. So what you can effectively do is you can choose 10% here. So here we have 10%. And here what you can do is you can effectively choose 20%. So now you can see the frequency of all those funds which are backtesting highly between these two return intervals. And you can now see that the two return intervals, the highest backtesting fund is basically Axis Mid-Cap Fund. And you can effectively choose all those here into the system and then model it in such a way. So these return intervals are all customizable. You can change the customization of them, and then you can effectively choose between the return intervals and see that which of the funds are having highest probability backtesting between these two return sets. So that's how it sets expectancy against a client, and that's how it helps you to select the mutual funds on the distribution analysis itself. We have given also the weighted probability return. So this actually gives you the probability of the entire set of the intervals which we have given. And here it shows you the remainder as well. So if you have missed out any intervals, all the other frequency will be in the remainder itself. So that's how the rolling analysis works out. It's a very comprehensive tool, and it takes another session itself for reviewing this particular set of a tool. But on an overview side, this helps us in active comparison for all the mutual funds, right? And now once you go ahead with other parameters like drawdowns, so drawdowns is another tool which is actually helpful to understand the strength of any particular set of a mutual fund. So for an example, we have given 5 sets of drawdowns. Now, what are drawdowns? Drawdowns are basically losses and the recovery of those losses. So here, what you can see here is that within these particular set of the mutual funds which we have chosen, the highest size of the drawdown in the worst parameter is actually backtested by Aditya Birla, Sundaram, and IDBI, right? And you can now see the length, which is the length of that particular set of the loss, how much days it took to have that particular set of a loss, and the recovery, which is in number of days. So the highest recovery is basically, you can now see that the fastest recovery is by PGIM, Quant, Taurus, and DSP. So these are the funds which have recovered highly and in a very fast manner against other set of funds. And you can now see for the worst drawdowns, you can also see for the second worst, third worst, fourth worst, and the fifth worst as well. So for an example, if you see this ongoing, so here what you can do is you can effectively click on this particular set of a icon. And once you click on it, you can now see that there are 2 particular set of a drawdown which are currently ongoing. So I'm just gonna show it in a zoomed manner. So here what you can see that these are the losses and these are the days it took to recover for that particular set of a drawdown. And the drawdowns given here are in the gray area. So for an example, if you see this gray area, you can now see that this is a drawdown and the white area shows you the recovery day. So basically it's a peak to trough analysis and trough to peak analysis, which shows you the recovery in number of days and how many percentage of the particular set of the drawdown has been recovered. So for an example, for DSP midcap, two of the drawdowns have not recovered as such. So you can see 57% is recovered and 65% is recovered. So similarly, you can model it in such a way that you can now see that how many of them are currently having an ongoing drawdowns. So these are the funds are having ongoing drawdowns here in the system. And once you click on it, once you hover your mouse on it, you can now see that this is actually a current drawdown. So it actually happened in 2021 and ended in 2022, which was the size, which is effectively average of -21. And the recovery is still ongoing till date in 2023. So that's how this works out for the drawdowns analysis. And drawdowns analysis can also be chosen in a start date. So for an example, if you want to choose a start date of 2020, you can easily choose that and you can easily take a look towards the drawdowns analysis here itself. Now from 2020, the worst drawdown size will be shown to you and you can now compare it for all the sets of the mutual funds. Now, if you want to compare drawdowns or if you want to check drawdown for one single fund, you can effectively click on that particular set of a fund and then check drawdowns analysis singularly. You can also check the rollings analysis for that particular set of a fund here itself. So this is a single mutual fund analytics, which you can take a review for the mutual fund itself. So that's how this works out for the drawdowns analysis. We have a couple more tabs which will help us in effective comparison. So let's say we were talking about rolling analysis before, but another important set of a tab is actually the monthly SIP, because here what you can do is you can see the start date given here. Now the start date you can choose based on the youngest fund, because what we have done is that in the main list, we had funds which are at least 5 years old. So if you remove these funds, then you can go beyond the comparison for those ages as well. So for an example, if we remove Mahindra and IDBI, so I'm just giving an example here. What you can effectively do is that you can then see the monthly SIP can also be, showing those particular set of dates, which is at least more than 5 to 7 years. So for an example, you can now choose not just on the 2018, you can now go beyond 2018, like 2014 itself. So this actually is a factor because it helps us in effective comparison. And what you can effectively do is that within this last 5 to 7 to 8 years, you can now see that the XIRR being generated. So the highest XIRR are by these funds and the lowest XIRR are by these funds. And effectively, as you know, that we have also added an index here, which has an average XIRR of 15.20%. So that's how this works out. And you can also choose to have an installment. So for an example, if you're choosing an installment of 10,000, and once you run the SIP, you can now see that these are the highest XIRR with the final value, and the final value is by Quant Midcap Fund. So that's how this works out. You can choose for the last 3 years as well. So let's say we are choosing 2020, and you can run the SIP, and you can now see the best XIRR is by these funds. Some of them are having a very high XIRR currently in this scenario, but that's how this works out. And Nifty Midcap 150 is another, index which is showing a very high XIRR itself. So as such, on a mid-cap basis, as you're comparing, you can compare for different sets of categories and come up with your own recommendation for the SIP strategy. And you can also download these particular set of the SIP in an Excel format. And you can also use this piggy bank for a detailed SIP analysis. So once you click on it, you can now see that this is the SIP which we have here in the system, right? So here you can see that this is a detailed SIP analysis, which you can choose to preview for any particular set of a fund. So once you click on this piggy bank, you can now run detailed SIP analysis for even an index as well. And all you need to do is just click on this piggy bank. That's how the monthly SIP works out. We have also given the calendar years. This is fairly, the calendar year analysis for all sets of funds and securities added into the system, which can preview for every single set of the security. And here, what we have given here in the 2023, it's basically the YTD return sets, which you can effectively take a look towards. And you can see that which of the funds are currently negative on a YTD basis, which is year to date. And here in the risk versus return, now this is one of the most important parameter, because here you can review that which of the funds or index or any particular set of the securities are a fairly, conservative or risky. So for an example, we are talking about conservative or risk. So here, for an example, what you can see here is that if you're taking a look towards conservative mid-cap funds, then these are the funds, because on the basis of start and end date which we have chosen, these are the funds which are actually having a lesser standard deviation, which is annualized risk. And you can effectively see this category average itself. So if I zoom it in, you can now see that if I'm comparing these 5 to 7 funds versus a category average, then Kotak Emerging Equity is one of the least, one of the conservative funds against the risk. So you can see the risk is actually by Baroda BNP. And you can reset the zoom and see that on the basis of the holistic view of all the mid caps, effectively Motilal and then Nifty mid cap are more on the riskier side, which shows you the high risk and high return and high risk and low return. So specifically, this is a fairly relative parameter, because here what you can do is once you zoom it in, you can now see that now currently SBI Magnum mid cap is in the low risk, high return. But that does not mean that there are not other funds which are lower riskier than this particular set of a category average or a fund itself. What you can effectively do is you can reset the zoom and you can now see that on the lowest risk side, effectively Kotak and Axis are one of the lowest risk funds. And this is how it works out. You can now see that in the left side, we have given the annualized return, and in the, which is the y-axis, and in the x-axis, we have given the annualized risk. That's how you can model these particular set of the funds in such. Now here, one important thing is that, as I've stated before for the monthly SIP as well, the risk versus return also will actually, you can now see that the dates will not go beyond 2014. This is due to the reason that you are having a fund which is the youngest date. You can now see that the age of the youngest fund is 9.27 years. So that's the reason it is actually backtesting only for that particular set of days. And this also applies for monthly SIP. So you cannot go beyond that particular set of a date. If you want to go beyond that, then you have to remove the funds from here for the effective comparison. That's the reason we have actually hard-coded it in such a way that you can only have those funds which are having the minimum age you have chosen. So that's how it works out, and you can easily choose in the dates between these dates itself. So if you remove the funds, the problem will effectively be solved. And similarly, we have also another parameter which is called as point to point, and point to point will also work out in such a way itself. So let's say if I'm choosing some particular set of dates, let's say from 2002 to 2001 to particular set of a date, you can now see that some of the funds will definitely not have the data points, because these funds do not have the inception of 2002. So that's the reason that what you can do is you can effectively choose any particular dates here. So for an example, when you see we have actually discussed the monthly SIP before. Now, what you can effectively do is you can effectively check out the lump sum investment value for all the funds. And this is kind of like a scenario analysis. So for an example, if let's say we are choosing a scenario between 2018 to 2022. So once you choose this, you can now see that on the calendar dates basis, you can now sort in on the basis of these parameters. And you can now see that one of the best parameters which have backtested by these funds is by Quant, PGIM, and Nippon. So this is between 2018 to 2022. And this is the lump sum value which we have chosen. Now you can change the lump sum value. Let's say we can change the lump sum value to 3,50,000. Now, once it is changed, you can now see the lump sum value is now changed effectively and seamlessly into the system. And you can now sort in basis on that particular set of a lump sum value. So 3,50,000 is now 8,76,000 for Quant Mid Cap Fund. Similarly, you can do that for on the percentage basis. So what you can effectively do is you can choose absolute or annualized. So for an example of absolute return sets, the absolute return sets will show you on an absolute basis which of the funds which has backtested highly between those date sets. So you can effectively sort in for all these 5 parameters. And effectively, you can now see that only a couple of funds are having a high return sets in the absolute basis. But for an annualized basis, when you analyze it, it analyzes any data point. So any data points between the dates you have chosen, let's say for a 6 months can also be analyzed, and even 3 years can be analyzed. So you can now see that these data points are now analyzed, and you can now compare effectively into the system. So that's how we have given 3 sets of parameter. One is the lump sum value. Once you click on lump sum value, you will now see that you have 3,50,000, which we have preloaded in our system. You can choose to have any particular set of a lump sum value and compare it in our system, and also see that has the mutual funds beaten the benchmark based on the lump sum value itself. So you can effectively check that out as well. So in the last 1 year, how many of the mutual funds have beaten Nifty Midcap 150? It's effectively, you can see that there are a couple of mutual funds, but most of them have not beaten Nifty Midcap 150 in the last 1 year. So that's how it works out. You can compare it. You can also see the category average is fairly higher in the list. There are DSP Midcap, Axis, PJM. They have not beaten this category average and even Nifty Midcap 150 in this particular set of the dates which we have chosen, which is a 1 year period. And that's how you can choose to have the point-to-point analysis. Now, these are the top parameters which you can use for the effective selection for the mutual funds. There are other parameters in the compare section. One of them is the performance chart, which you can take a look towards. It's effectively a performance chart between two different dates. You can choose to have a point-to-point dates itself, similarly to the point-to-point analysis, but this is just a graphical overview of the comparisons of all the funds and the securities which you can compare. And you can effectively take a screenshot out of it. And also we have two other parameters like the last 12 months, and which you can take a review for the last 12 months, that which funds have actually had the best average, worst annual volatility and the worst return sets on a monthly basis. So this is also a very good way to compare on a monthly last 12 months. It is a recent performance analysis, which will help you to take a review of all these funds. And then we have these two parameters. Now, these two parameters which I'm talking about are position overlap and now these parameters are more, let's say, mutual funds in take a check that and Nippon overlap. We're choosing both of the would not be a suitable option. You would either choose Nippon or either choose Sundaram based on all the parameters which we have shown before. And then what are the stocks which are overlapping between these two sets of mutual funds. So that's how this works out for the position overlap. And we also for all the mutual funds and shows that effectively for all the mid cap, but you can effectively see one of them is actually having a low correlation, which is 0.74, which is Motilal Oswal. So Motilal Oswal versus Quant is actually having a low correlation between each other. So that's how this works out, that they are two fairly different funds based on the selection of the securities and based on their behavior. And that's how this works out itself. So I hope my voice is audible to everyone. If not, I'll just repeat this again. There are two sets of parameters. One of them is position overlap, which helps us in effective comparison to see that if the entire set of the funds we have chosen are highly diversified or not. And you can effectively check between the two funds, like 41% between Sundaram Midcap and Nippon India Growth. You can click on this and you can now see that the overlap between them is 41%, right? And for the correlations analysis, what you can effectively do is you can series momentum, and the higher the correlation is, the higher it is closer towards 1, and the lower it is closer towards 0. So for an example, if you're checking Motilal Oswal midcap versus Quant midcap, they are fairly different funds based on the correlations. So that's how this works out for the correlation. But these two parameters are more useful when you're adding portfolios. So for an example, if I'm adding a portfolio like this, you can now see that a couple of the funds which with different categories are being added into the system. These are the 7 funds, and you can now see the position overlap between them. So when you have done selecting your mutual funds, what you can do is you can effectively add those mutual funds in the client portfolio to see if the correlation position overlap between them is high or not. Like for an example, 35% is the position overlap between DSP equity opportunities versus Aditya Birla SL multi-cap. You can click on them. You can now see the overlap between them. Similarly, for the correlation itself, what you can do is you can now see that Union small cap versus banking and financial services, which is SDFC, is having a low correlation of 0.67. Now that is a good amount of correlation for a diversification, but you can also see that there is a high correlation like 0.97 versus 2 mutual funds, which is a multi-cap and other is equity opportunities. So that's another way to check the diversification of the mutual funds if you're choosing all those mutual funds as a portfolio. And once you're done with it, you can now create a list and then make a editable PPT report. So for an example, I'm just choosing a couple of the mid-cap funds, like 6 mid-cap funds here itself. what I can effectively do is I can create a customizable PowerPoint report to show that why have I chosen these mid-cap funds. I can even add an index. Let's say we add an index again. And let's say we are also adding the category average of mid-caps here to show the client that why have we chosen these funds for their mid-cap selection. And then what you can do is you can create a editable PowerPoint report. Now this downloads all the major comparison tabs, which I've actually discussed before in this session, and it's highly customizable. So I'll just explore through these tabs and then we can, take a look towards all other parameters. So let's say 1 second. So as you can now see that within the PowerPoint comparison, this is how the comparison report looks like. And what you can effectively do is you can take a look towards the parameters which we have chosen. So this is how it works out. It's a highly customizable report. In this particular set of the logo, which you can see it, which is NGEN Markets, your company logo will be there. And here what you can do is you can effectively choose to have any parameters you want. So for an example, you can remove one of the tabs or you can choose any other of the tabs. You can highlight the Sharps ratio of some of the mid-cap funds or the funds which you would like to have. And that specifically is how it works out. And you can customize these parameters for the clients to show that is it making sense on this perspective which you have chosen or not. For an example, we have discussed about the risk and return. So why have we chosen the Kotak equity opportunities? Because emerging equity, because we had one of the lowest risk, which is the standard deviation given in the system. So you can effectively choose to have and add in the data labels. So all those parameters are highly customizable, and you can then take a review of other parameters like the statistics here within the YTM and the net YTM if you're choosing some. And then we have the position overlap, which we have given here. We have the performance chart. We have this, all the other parameters in the main list, which we have chosen. And these parameters are fairly useful if you're comparing all the mutual funds and showcasing against the client that, why these particular set of funds are making sense. So for a brief example, why have I chosen HDFC mid-cap opportunities? Because it has a really good positive percentage. So I can effectively show that these are the top 5 or the top 3 funds which I would like to have in my portfolio. And you can now highlight them accordingly based upon your changes you have made in the system and save it as a PDF and send it to the clients. So that's how this works out for the editable PowerPoint report. It's a very comprehensive report which you can generate, and you can choose to have any particular set of the tabs or the sheets which you would like to show to the clients effectively into the system. So that is all for the today's session. We are wrapping up the session for today, and we will open the forum for the Q&A. So if you have any questions regarding this session or any other parameters, you can effectively ask us in the chat box or verbally, and we will try to address them.
Hey, hi, can you just repeat how did you create the PPT?
Sure. So if you would like to create a PowerPoint report, all you need to do is you need to first add in the list of the funds. Let's say we have added a couple of funds here. Let's say we are adding another one here. So all you need to do is just add in one of the fund. Let's say a large cap fund. So once the fund is added into the system, all you need to do is just click on this export option, which we have given for the PowerPoint. Once you click on this, you now see that this is how the PowerPoint is now created.
So is it something like that? There is a limited scope, because when I'm clicking on the PowerPoint, it is showing you can only print PowerPoint reports for list of 1 to 20 items.
Yes, limitation is there for only up to 20 schemes taken by this report.
Okay. Yeah, Arnab, the limitation is there because what happens is most of these tables, if you have more than 20 items, they don't fit in one single PPT slide. So then obviously the design gets affected as a result. So it's limited to 20 as of now. Basically.
Okay. And one more query I had. If I want the comprehensive MF tracker, with all the gamut of funds, the mutual fund universe, and I want to set an auto mailer to a particular group, how do I do it?
Okay, so you want to set up automated alerts for when statistics for funds change? Is that
Yeah, that is
yes.
the thing. I mean, a tracker of MF showing the comparative returns for all the universe of funds like large cap, mid cap, small cap, and that has to be directly pop up into my email ID. How do I set it automatized?
Sure. So there is, we do have a daily report. So Mayor, if you just go to the fund section, yeah. So there's a reports tab. You can obviously log in and download it here, but you can also just click on this. Umesh, just unsubscribe from one of them. Yeah. So you just come here and click on the plus button here, and you will get either the regular fund version or the direct fund version every day in the morning.
Yeah, but then if I want it to be delivered in my inbox, how do I do it?
Here, so it will, whatever your login email address is, file will be sent there every morning.
And can I add more email IDs to this, or only my login email ID?
It's just your login email ID. Ideally, I think if you want to send it to more people, you can set up an auto forward or something like that. But we just send it to the registered login ID.
Okay, got it. Okay.
Any other questions, please? So there's a question on the chat saying when we look at correlations, the fund that's getting compared is not visible all the time. Well, yes, because obviously on the top, as you can see, the column width is quite small. Obviously, if you make it big, then it won't fit. So ideally speaking, if you see something that catches your eye, you want to investigate further, you can always hover with your mouse on it, and you'll the top header will tell you which is the second fund in that correlation number. But generally speaking, this matrix is supposed to give you a decent idea of how your correlation is for these given list of funds. It could be a portfolio. There could be just a short list of funds that you have that you want to maybe make a portfolio out of. We have a similar way of analyzing correlations in the position overlap tab. The same thing over there is when you hover over anything, you'll see the top. You'll see the top level change. Download in Excel. Yeah, so actually you still can, but I believe that can be done in the portfolio section. So if you run a portfolio and go to the correlations tab, where just quickly show that there is an Excel icon. We can probably add one here as well. Umair, can you? Yeah, go ahead. I think there's a little bit of lag. Apologies for that. Yeah, so that's the Excel download that's still there, but you have to run it with the portfolio. Any other questions, please let us know. Okay, Umair, we can close for today. Thank you.
So thank you so much, everyone, for this for joining this session. We will come up again with the new topic in the next week, 4 o'clock Friday, same time, and videos in the YouTube channel as well. So YouTube is the way where you can connect and see all the videos mounted in our system. You can check them. We have already onloaded all the longer format of the videos. You can check them out, which are all the webinars. And effectively, you can also take a look towards the new updates which we are releasing every single week and every single month. You can check out on our Twitter. So you can follow us on Twitter and you can then take a look towards it. Similarly, a new update which we were talking about before is actually being onloaded in NGEN Markets Terminal. It's regarding the RTA connections. So you can effectively onload all the RTA connections by your side as well. We have provided all the parameters and every single steps you can take to actually effectively add your RTA details. So that's how this works out. If you have an RIA code, you can just check in the RIA code, and that's how it works out. And you can then add in your login ID and password here itself. So that's how you can use this RTA connection tab to stay connected and then onload your RTA connections if you have not done yet. And you can also connect with us at support@engineresearch.com. This is the ID which we have. If you have any queries, anything related to the RTA or any other parameters, you can effectively connect with us on this mail and we will try to address them. So thank you so much, everyone. Have a nice weekend ahead.